There's a wave of optimism amongst traders right now. Buckle up because this is where the action gets exciting. Just a quick reminder, if you need a refresher on the mechanics of the Bitcoin halving, hit up the detailed explainer video that we've made. It's gonna be right here on the top right corner. But let's jump right into the heart of today's topic. The big bullish bets on Bitcoin happening right now. Post-halving, traders are not just optimistic, they're voting with their wallets, piling up about $500 million in bullish options for Bitcoin to rally by June. Why this specific timeline? Well, historical data points to significant price increases roughly 180 days after the halve. The strategy is based on patterns observed throughout the previous cycles. Are you thinking on getting in this bullish action as well? Let's talk about how you can use BitTopics to potentially profit from a Bitcoin bull run. On BitTopics, what you can do is very simple. You can just head over to the options tab. You can select Bitcoin or Ethereum. Again, we are focusing on the post-halving, which is Bitcoin related. But as we've seen before, there's a huge correlation between Bitcoin and Ethereum movement. So when one moves, the other tends to follow as well.
Very close. Just follow me, okay?
Yeah. They're not going to be one-to-one, but the movement itself tends to be the same. So if one goes up, the other tends to follow on the same trend. So let's go for Bitcoin. As we see, a lot of people are going for June. So we have right here a 28th of June series, the expiration for June 28th. And for the strike, you can do at the money, in the money, out of the money, whatever fits your strategy the most. Of course, we've covered these terms: in the money, at the money, out of the money. You can check this video out right here on the top right corner, is where we go a little bit more in detail on a beginner's guide for options traders. So if that's something new to you, if you're just learning about these things now, check out this video. But let's say you want to go at the money. So we're currently 66, almost $67,000 for the strike. So we can see 70,000 is the closest one. Of course, you can go 65. Let's go 65 actually. And right here, you can enter the amount. This is the size that you're gonna get into. So the size is calculated on contracts. So if you want to go 0.5, for example, contract, meaning that you're going to have half of a contract. So if a full contract is worth $1,100, you're going to pay $5,700 for half of it. So what happens is the P&L, I'm going to put the P&L here on the screen. Is the profit and loss chart at expiration. This is at expiration, so not right now. Of course, when you open a position, you usually tend to stay in the red for a little bit, mainly because the spread between buy and ask, there's a little bit of a difference there. But what matters most is the P&L at expiration, which is what you're seeing on the screen right now. And this is the maximum profit and loss that you can have from this option. The maximum loss that you can have from this option, I'm going to say it right now, is the money that you pay, is the premium that you pay for the call that you're buying. But the upside is infinite from a call. So if Bitcoin goes to $1 million by June, you're gonna make a lot of money from this option. So for naked simple options, you have limited downside but infinite upside. So you can see how calls are very profitable for you to ride this bullishness that everyone thinks the market's gonna have. Another way you can do that, you can go to the income products tab. And this is my favorite part, honestly, because we simplified it so much that even a 10-year-old or your mom can trade these, just understanding what these numbers mean. Meaning here we have a target. The target can be below 55 or above 72,000. So you can see that you want to be above these targets or below these targets if you choose a below or if you choose an above options. So these income products, they are on the back end, they are spreads. So if you want to learn about spreads a little bit more, I recommend you looking into it. This is pretty much what is happening. These are spreads. So you have limited upside, but you also have limited downside. So you don't lose a lot of money, but you can have huge returns, as you can see here. For example, we have a 3,700, we have a 300, we have more passive income strategies like the 2%. And for June, which is when all this movement is happening, all these expirations are happening for the $540 million on options volume expiring by June, we have right here two choices: above 100K and below 28K. If you believe Bitcoin will be above 100K or below 28K, you can take these bets right here. You can take one of these two and you can see that the rewards are very juicy. The maximum profit is very juicy. Of course, these are considered high risk spreads. So of course, it needs to fit your risk management and risk level. Of course, there's people that is not going to be this risky, so they're not going to get into it. This is why we have the options where you can choose safer strikes. You can choose whatever strikes and expiration fits your criteria. We have leaps that you can open, options for next year. So we have them all right here. And soon with the new UI, you're going to be able to sell these options. You're going to be able to have a Pro Advanced module here. So you're not limited to what we offer you. You can do everything as you wish. These strategies can position you to profit if Bitcoin's price climb as expected. You simply have to choose your strike price and expiration based on your market outlook and risk appetite. Of course, remember, with higher potential returns also comes higher risks. So it is crucial for you to manage your investments wisely. After halving, the immediate effect is the reduced supply of the new Bitcoins entering the market. The scarcity tends to trigger a bullish behavior. Historically, the months following a halving have not just been an uptick in Bitcoin's price, but a ripple effect across the entire crypto market. Investors anticipate these changes, leading to increased trading activity and often a surge in Bitcoin's price. This isn't just a mere speculation, it's backed by a mix of historical data and trader psychology focusing on supply and demand economics. What's fascinating is that the cycle also tends to attract new and previously cautious investors, drawn by the media buzz and the potential for substantial returns. So almost like a FOMO. But is this time different?
How is it different?
The current halving cycle does stand out in several ways. For starters, we had the introduction of the US spot Bitcoin ETF, and that has made Bitcoin more accessible than ever, broadening the investors' base to include those who might prefer traditional investment vehicles. This has not only increased demand, but also added a layer of legitimacy to crypto investments in the eyes of the public and regulators, especially those people who are a little bit older. Bitcoin's price behavior before the halving was something that we've never seen before, reaching new highs that were previously thought to be long-term targets. This suggests that the market might be maturing, with Bitcoin increasingly viewed by everyone just not only as a speculative asset, but also as a viable long-term store of value, the digital gold. The big question is now whether these new factors will lead to even greater post-halving cycles like we saw in the past. So, are miners feeling the pinch? Miners are indeed facing new challenges post-halving. The halving cuts their block rewards by half, which can be quite a shock to their economics. And to cope, miners must improve efficiency either by upgrading to a more powerful machine or a more energy efficient mining hardware, or just by relocating to regions with lower energy cost. On top of that, the rise in transaction fees can be a double-edged sword. While it does provide another revenue stream for the miners, it also requires a higher volume of transactions to be truly significant. However, we've seen that working out. With new innovations on the Bitcoin network, such as the embedding of digital artifacts known as ordinals, we've seen an increase in demand for block space, potentially offsetting some of the loss in the block rewards income. This dynamic creates a new playing field for miners, where adaptability and efficiency are more crucial than ever. So a future could be where both of these things combine to make a full income for these miners. So what is next for Bitcoin?
I can't figure out what's next, Joe.
As we gear up for the future halvings, we expect to see some big shifts. We're likely to see some miners consolidating and maybe even moving geographically towards places like where it's cheaper to mine, like LATAM or Africa. And with the ongoing growth in the network's hash rate, we have confidence that Bitcoin in the long term still looks stable and solid for the future. But what is driving this bullishness? Well, Bitcoin now is down 10% from its peak, but now it is more accessible than ever, thanks to the new US Bitcoin ETFs. Because of that, we've seen a fresh influx of both retail and institutional investors. This increased accessibility could be a game changer, making Bitcoin not just a niche investment, but a mainstream asset. More players in the game means more demand, and of course, that leads to price hikes. What do you think about these bullish bets? Are you feeling optimistic about Bitcoin's price as well? Well, drop your predictions down in the comments below. Looking further down the road, the optimism isn't just for the short term. The put-to-call ratio, which helps gauge the market mood, shows even stronger optimism for the longer term. Lower ratios and options expiring later in the year suggest that traders are betting big on Bitcoin continued rise. However, this is not just smooth sailing. We've got some choppy waters that could affect Bitcoin's rally. Think inflation, geopolitical tensions, wars, changes in the mining landscape. All of these factors could shake things up. So while the market is still optimistic, seasoned traders know to watch these indicators closely, as should you. And this wraps up our look and why the market is buzzing with optimism for Bitcoin post-halving. If you enjoyed the insight and you want to keep up with all things crypto and options, don't forget to like, subscribe, and turn on the notifications so you don't miss the next videos. We've got plenty more analysis like this if you like this type of video, so keep these comments coming and let's get the conversation going down below. Again, thank you for watching, and I'll catch you guys in the next video.